Hello students, welcome to EPG Pathshala. I am Navina from HPU. Today we are going to talk about on module long-term financial analysis and capital structure ratio from paper accounting and analysis. Learning objectives. After going through the module, students may be able to gain ample knowledge regarding the meaning of working capital, statement of changes in working capital, the format and the reasons for its preparation, the statement of sources and application of funds, its format and the users who use up the statement. Introduction. For carrying out business smoothly, every enterprise requires an adequate amount of finance. Continuous generation of funds is also required so that the growth is not hampered in between and the firm never faces the situation of financial crunch. Cash is considered the lifeblood of an organization and needed for the non-interrupted flow of the firm. Continuous efforts are made to acquire the funds through different sources and judiciously using them for its operations. This inflow and outflow of funds is also recorded in the form of statement of change, which depicts the changes in the balance of funds. The statement revealing the changes in the current natured accounts between two consecutive balance sheet dates is termed as statement of changes in working capital. Meaning of working capital. Organizations need funds for long-term as well as short-term purposes. The part of capital which is required for fulfilling the short-term needs or the day-to-day working operations of an enterprise is termed as working capital. For example, payment of salaries, paying off short-term loans, purchase of raw material, etc. In other words, the difference between company's current asset and current liabilities is termed as working capital. In the words of Shubin, working capital is the amount of funds necessary to cover the cost of operating the enterprise. Every firm tries to maintain the adequate balance of the working capital because both excess and insufficient balance of working capital can prove harmful for the organization. For this purpose, a proper record of the inflow, that is increase, and outflow, that is decrease, of working capital is kept, and record of the changes in the working capital of the firm is kept in the form of statements of changes in working capital. Statement of changes in working capital. Statement of changes in working capital is the overall change, that is increase or decrease in current assets and current liabilities, or a consolidated form which reveals the changes in the amount of net working capital, that is, changes in current assets and current liabilities, which makes clear that whether there is an increase in the working capital or a decrease in the working capital. For the preparation of statement of changes in working capital, following are the rules. First rule: increase in current asset leads to increase in working capital. Second, increase in current liability leads to decrease in working capital. Third one, decrease in current assets leads to decrease in working capital. Decrease in current liabilities leads to increase in working capital. It should be noted that a change in the current assets without any change in the current liabilities will result in a change in the amount of working capital. On the other hand, a change in the current liabilities without any identical change in the current assets will result in a change in the amount of working capital. For example, the owner makes an additional investment of rupees 1,20,000 in a company, as a result of which the current asset will increase by rupees 1,20,000, but there will be no increase in current liabilities. As a result, the company's working capital increases by rupees 1,20,000. Format of statement of changes in working capital. Format of working capital is prepared on the basis of following. Preparing a statement of changes in working capital means a comparative evaluation of the values of current assets and current liabilities of a company, presented in the two consecutive balance sheet dates. Second, such a comparison helps the management to look up at the sources which leads to an increase in working capital and the area that results in the decrease in working capital. Format of statement of changes in working capital is given as below, in which first of all we record current assets, and the table is divided in 4 columns. In first column we write down previous year's figure. In second column we record current year figures. In third column we calculate increase in working capital. In fourth column we calculate decrease in working capital. In current assets we include cash in hand, cash at bank, bills receivable, sundry debtors, marketable securities, prepaid expenses, closing stock. And in total current liabilities we include bills payable, creditors, outstanding expenses, provision for bad and doubtful debts, pre-received income. Net increase and decrease in working capital is then calculated on the basis of these total assets and current liabilities. Current assets. These are those assets which can be converted into cash within a short period of time, normally one accounting year. Example of current assets are cash in hand and bank balances, bill receivable, sundry debtors, accrued incomes, prepaid expenses. Current liabilities. These are liabilities which are known to be paid in the ordinary course of business in a short period of time, usually one accounting year. Example of current liabilities are bills payable, dividends payable, sundry creditors, outstanding expenses, bank overdraft, provision for bad and doubtful debts, short-term loans and advances. Usually, the firm experienced a net increase in the working capital, but this may not be the situation all the time. Sometimes, a company may face a situation where the net working capital shows a decrease. A decrease in net working capital means that the financial health of a company is deteriorating at a first phase and it is facing the shortage of cash for capital expenditures. This may be considered as a red flag and led to the decrease in sales of the company, ultimately affecting the image, growth, and competition facing capacity of the firm. Quick revision: the statement recording the inflow and outflow of funds is termed as fund flow statement. The statement recording the changes in cash balance is termed as cash flow statement. The statement revealing the changes in the current natured accounts between two consecutive balance sheet dates is termed as statement of changes in working capital. Statement of changes in working capital is the overall change, that is increase or decrease in current assets and current liabilities, which makes clear that whether there is an increase in working capital or decrease in working capital. Change in the current liabilities without any identical change is the current assets will result in a change in the amount of working capital and vice versa. Analyzing the statement of changes in working capital helps the management to look upon at the sources which led to an increase in the working capital and the area that result in the decrease in the working capital. Reasons for the preparation of statement of changes in working capital. A change in the working capital reveals whether the change is a good one, that is increase, or a bad change, that is decrease. Accountants prepare statement of changes in working capital because it helps in comparing the figures relating to the current period with that of the previous year, hence revealing its growth. Analysis about the change in the current assets and liabilities is made easy. Also, the management is provided with a base to set the policies. It helps management to look upon the areas which need improvement. Preparation of fund flow statement is made easy by preparing a statement of changes in working capital and unfolding the directions of inflows and outflows of funds. Quick revision. Statement of changes in working capital leads to the preparation of fund flow statement. The management is made aware about the increase or decrease in working capital from the statement. It reveals how efficiently or effectively an organization is carrying out its operations. Statement of sources and application of funds. According to ICAI, fund refers to amount set aside for a journal or specific purpose, whether represented by specifically earmarked asset or not. Organizations try to maintain a balance between the various sources of funds and the application of those funds. Third, maintaining balance would sound much easy when a proper record of the sources and application of funds is kept. This recorded statement would help the management in deciding whether they are investing in the right place or not and take decisions accordingly. This consolidated record is termed as Statement of Source and Application of Funds. The source and application of funds statement shows the total sources or areas of new funds that are raised by an enterprise between two balance sheet dates and also tells whether where the funds are actually used up or applied between two balance sheet dates. The statement contains two sections. The source means from where the inflow of money took place. Inflow of fund may arise from many sources. It may arise either from an increase in liabilities or decrease in assets. Examples of sources of fund include an increase in equity share capital, increase in reserves, decrease in value of fund asset, proceeds of loan raised, proceeds of shares that were issued, net income after tax, repayments received on loans, etc. Application of fund. Application means utilization of funds or where the money is being used up. It may arise either from a decrease in liability or increase in assets. Example of application of fund include losses to be faced by the firm, purchase of fixed assets, granting loans, repayment of loans, etc. Statement of sources and application of funds is calculated with the help of given format, where in left hand side we record sources of fund, in next column amount, and in right hand side application of funds. Under sources of funds, we record shareholder funds, which includes share capital, reserve and surplus. Second, we record loan funds, under which we record secured loans, unsecured loans, and next, any proceeds of shares can be included under sources of funds as well. Under application of funds, we record fixed assets. For example, any purchase of land, purchase of machineries, etc. Next, we take investments in mutual funds, repayment to creditors, startup costs, repair of buildings, etc. So let us understand the statement of sources and application of funds with the help of example. For example, you are given with the share capital, preference share capital 20,000, equity share capital 40,000, which sum up to 60,000. Loan, secured loan 70,000. Total sources we have 1,30,000. Under application of funds, legal fees 5,000, licenses and permits 15,000, leasing cost 15,000, inventory 25,000, purchase of land and building 60,000, repayment of debts 10,000. Total application we have 1,30,000. By looking at the example, it can be interpreted that it can be seen clearly that the company raises funds of rupees 60,000 by the way of preference share capital and equity share capital and borrows rupees 70,000 by the way of secured loans. A total amount of 1,30,000 was raised from different sources of funds. Application of fund means the area where the raised funds are used up. The company here uses up to 20,000 raised by the means of preference share capital for paying off legal fee and licenses of rupees 5,000 and 15,000 respectively. Rupees 40,000 that was raised by issuing equity shares is used up for paying the leasing costs and buying inventory for rupees 15,000 and 25,000 respectively. Funds borrowed as a form of secured loans are used up for purchasing land and building, that is rupees 60,000, and for repaying the debt dues on the company with rupees 10,000. It can be noticed that the sum total of sources equals the sum total of its application, depicting that the company is using up the funds raised by it to the full capacity. Users to the statement of sources and application of funds. This statement serves as a communication tool with the outside world, depicting that from where the business is generating funds and in which area is using up those funds. Moreover, the statement provides with the exact demarcation of where and how much portion of the raised funds is being used. The statement is used up by the following users. First, analysts, for analyzing the situation of the funds by the company in the accounting year. Management use these to make decisions as to from where to finance in the future and where to invest, keeping in mind the figures in the statement. Third one, banks and other financial institutions use these statements for analyzing the financial position of the firm and taking correct decisions towards the true financial needs of the firm in the form of loans. Next, government make use of these statements for making ensure that the organization is conducting the business in a fair manner and to see that it is using the funds exactly where needed and to keep a check on its operational working. Quick revision. The statement of sources and application of funds tells exactly where the money is coming from and where it is being utilized. It reveals whether the management was competent in making sound investment decisions or not. Inflow of fund may arise either from an increase in current liabilities or decrease in current assets. Application of funds may arise either from a decrease in liabilities or increase in current assets. The statement is used up by different users from their own separate purposes, such as by the analysts, by management, by government, and by financial institutions. So, students, let us summarize what we have learned in this module. Every business is set up with the main aim to earn the profit and perform the operations for a longer period of time. With this aim, the business transacts with the outside world either to gather funds or to sell its products. For carrying out the business smoothly, every enterprise requires an adequate amount of finance and continuous generation of funds is also required so that the growth is not hampered in between and the firm never faces the situation of financial crunch. Firms deal with current assets and current liabilities throughout its working life, makes efforts to maintain a balance between them so that current assets are always in a positive balance. The difference between the current assets and current liabilities is termed as working capital, and the statement so formed to keep a record of the changes in the working capital of the business is an accounting year is termed as statement of changes in working capital. Change means the net increase or decrease in amount of working capital. It becomes an important part of the financial statements of the company and reveals the changes in working capital, that is current assets and current liabilities for an accounting year. The statement tells those facts which are not disclosed even in other final accounts. The funds collected by the firm from different sources and applies to different uses is also recorded in the form of statement of sources and application of funds. It clearly points out the exact areas where and how much the generated funds are used up by the company. It helps the management in framing policies and keeping a check on the unwanted use of funds, if any. Both the statements serve as complementing, consolidated set of information which helps the investors to take decisions before investing, financial institutions before granting loans, and the government to keep a check on the working of the business enterprises. Thank you.